Good morning, warm welcome. Sage here for Kalkine TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup. Let's dive into some of those key highlights and happenings from yesterday, starting with the US market. And Wall Street's shares reversed earlier losses in a choppy trading on Wednesday, and the US Treasury yields hovered near highs for the year after data suggested the US job market and consumer spending continues to improve. MSCI's gauge of stocks across the globe paired losses to trade down 0.28%. And the benchmark US indices closed flat on Wednesday, 24th November, after the weekly jobless claims fell to a 52-year low. And the Fed minutes showed inflation to persist longer than previously thought. The S&P 500 was up 0.23%. The Dow Jones fell 0.03% and the Nasdaq Composite rose 0.44%, and the small cap Russell 2000 was up 0.22%. The weekly jobless claims declined by 71,000 in the previous week, the lowest since November 1969, the Labor Department said on Wednesday. The sharp drop in benefits claims suggests the labour market continues to improve as the Delta variant concerns subside. And meanwhile, in a separate report, the Commerce Department said the core personal consumption expenditures price index, Fed's preferred inflation gauge, surged 4.1% year over year, the highest since 1991. The real estate, technology and energy segments led the S&P 500 index on Wednesday. Materials and consumer staples were the bottom movers, and 5 of the 11 sectors of the index stayed in the red. And now it's time for a small break, but please stay tuned as I'll be back with the UK and the Australian market updates. Hi, I'm Sage, and get ready to take the crypto ride with me on Kalkine TV. Watch the crypto buzz every Tuesday and join the excitement at Kalkine TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching Kalkine TV. Hi, Sage back again, and the European shares ended a 4-day losing streak on Wednesday, with shares of Telecom Italia leading gains, but fears around Europe's worsening COVID-19 situation and the prospect of severe restrictions restrained the market. And the Pan-European Stock 600 index climbed 0.1% after recording its worst session in nearly 2 months on Tuesday, amid a continental resurgence in coronavirus cases and fears of rising interest rates. The UK stock market continued the cautious trade on Wednesday, and the oil stocks that had lifted the markets in the previous session were consolidating as the major focus has turned to the possibility of a rate hike in December and a probable third wave. Both Royal Dutch Shell and BP were trading near the neutral line at the time of writing. And the shares of prominent fashion retailer Mulberry surged following its half-yearly results announcement. The company's sales for the reported period returned to pre-COVID levels with a growth of 34%, and the shares of newly listed technology company DARKTRACE slumped on Wednesday on reports that the company may drop out of the FTSE 100 in the next quarterly review of the index to be announced on the 1st December. The company, meanwhile, has said that it is well positioned to lead the way in cybersecurity. And Japan's Nikkei ended lower on Wednesday as the growth-oriented stocks took a beating amid the investor concerns that the US Federal Reserve might speed up policy tightening to cope with broadening inflationary risks. And the Nikkei average dropped 1.58%. Chinese stocks closed up to their highest in 4 weeks on Wednesday as food and beverage shares in coal miners gained, while improving sentiment in the real estate sector underpinned developers' shares. And the Shanghai Composite Index gained 0.1%. South Korean shares closed lower on Wednesday as the growing bets of an earlier than expected tightening in US monetary policy lifted Treasury yields, and daily cases of COVID-19 in the country touched a record. The Kospi ended down 0.10%. Let's move on now to the Australian market, and the ASX 200 benchmark fell 0.2% on Wednesday. A number of ASX listed companies, including gold miner Evolution Mining, financial services company IOOF Holdings and e-commerce company Kogan.com, are scheduled to hold their annual general meetings on Thursday. Looking at the commodity market now and starting with the bond yields. The 2-year yield, US 0.64%, Australia 0.61%. The 5-year yield, US 1.34% and Australia 1.41%. And the 10-year yield, US 1.65% and Australia 1.85%. The dollar index rose 0.4% and hit a 16-month high. And the Turkish lira remained under pressure, falling 5.75%, compounding its historic nosedive on Tuesday as President Tayyip Erdogan defended the recent rate cuts even as inflation soared. Oil prices inched lower as investors raised questions on the effectiveness of a US-led release of oil from strategic reserves, and the Brent oil futures were down 0.18%, while WTI futures were down 0.22%. And the gold prices fell amid the release of strong US economic data, which appears to be supporting the rate hike bets. And the US gold futures settled flat. Meanwhile, the iron ore price has surged 2.9%, compounding a gain of 4.4% overnight on Tuesday, following an improving outlook for the Chinese demand. And thanks for your company on the report. That's all for now. Do keep watching Kalkine TV for more of the market updates, and this is Sage signing off.